What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTII technicals, raw price action, and statistical threat of analysis on this happy Monday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Yeah, team, so what we're looking at here are the Gaussian bands, right? So this right over here on both GTII and FNGR. This is what we use to identify, one of the ways that we used to identify the floor before a potential bounce to the upside, of which we did get. Okay, team, so now if we can just go ahead and focus on the ARQ indicators, DBSI, please notice here that we actually have the bulls leading the way with a 60% over the bears at a 40%. And upon that 40%, it is much understood because we are now back to test the Gaussian band's mean band, right? So this is going to be the 91.46. We're just at about 91. So yeah, team, just please notice here that the price action absolutely ripped to the upside here, facing a top side of 101. Of course, was the total resistance of the Gaussian band itself before we actually got that bounce back to validate that that mean band, right? So go ahead and notice here too that we used and we reacquired the inside of the Gaussian bands on FNGR before a bounce to the upside. So there could be a continuation slightly to the upside before we can face a bounce back to validate 411 before a continuation to the upside. It's looking incredible for both of the assets, okay, team? So now if we would have paid attention to the ARQ algorithm from the indicators that we just released, go ahead and notice here that on, let's see, this was on Monday, the 17th, on the 8-hour chart. We actually ended up getting a short signal here right at the top side of this candle, which is the opening value at 603. And that actually had us cover the position from the long, right? So we longed here on, what date was this? So yeah, this was on Wednesday, July 5th. The algorithm set a long position, so let's go, right? So bet to the upside, and it had you take profit right over here. So this was a position liquidate right at about 603. So taking that trade from Armor, let's go ahead and see what that potential was, right? So opening of the candle right down there, which is, I'm measuring this, by the way, right? Just from over here, right? So to the top side of to the opening of the candle right over here, right? So let's go ahead and measure what that was. That was a 59.49% move to the upside. Of course, it could have gone higher, but this is essentially what it suggested, and it would have been pretty nice for automatic trading right there, right, team? So go ahead and get in touch with us at arqindicators@gmail.com to get your hands on these algos. Okay, team, so let's go ahead and move on to the next chart here and see what we have. This was, guys, you already know what I do here. You know that I practice statistical metrics here, right? So this is, in fact, what gave us that very big edge for a potential bounce to the upside, okay, team? Other than the fact that looking at critical areas of support and resistance, yes, of course, they always work, right? But in this case, we did use volatility versus momentum in order for us to get this potential to the upside, okay, team? So let's go ahead and just go over this conditions because the signal has officially fired. And there is one more thing that we can add here just to see if we have support all the way, right? So it's getting closer and closer to it. So, all right, so this is the condition or the context, right? Anytime that volatility has expanded, this is very particular, okay? This is not the same as the other iterations where I backtest. Okay, so anytime that volatility has expanded into the 80 percentile and started a contraction phase from within this realm here, I've actually paired that with stochastic momentum, and I've taken a measurement throughout the entire trading history of the GTII asset on the 6-hour time frame, as you can see here, right? All these iterations, they're all my notes, right? So yeah, I've taken note of every single time where that condition has happened. And specifically the notes that I'm speaking of, let me just go ahead and put that like that. The specific notes that I'm speaking of is or are the upside thrust, right, from the firing of the signal. The duration of the iteration, like for example here, is telling you that this iteration lasted 18 hours. And the amount of times that volatility versus momentum, the profile itself gets the upside correctly versus incorrectly. Okay, so these are all the samples that we gathered, right, and to acquire this data set right over here. Okay, team, so what you're looking at now is actually out of 30 iterations, throughout the entire trading history, 24 were guessed correctly to the upside. That gives us an upside accuracy of about 80% with an average upside thrust of about 100.542% over the span of about 14.18 days. Okay, team. So now this is proof of work here. And now I did calculate the standard deviation based on this move here, okay, which is pretty much everything in the trade. All right, team, this is market makers usually speak in standard deviations from current strike prices, okay, team? So this is absolutely something that is practiced in the broader markets and institutionally. Okay, team, so the standard deviation based off of 100.542 mean, you're looking at 89.56% as the 68% of the results, right? So 68% of the performers on a bell curve, if you're familiar with statistics, right? So that 89.56% is the average performers. We do have a lower bound of the first standard deviation landing at 10.98%, of which, of course, we already met, and a higher bound of the first standard deviation landing at a massive 190.10%, right? So please listen to what I'm saying here. It is critical that you listen to what I am saying now, okay? Yes, it is measuring 190% all the way to the higher performers. Of course, it is the bell curve's top side, okay? So meaning that that's around what, like 15-16% of the performers are landing at 190, where the higher probability performers are landing at 89%. So now, when you do have a statistical setup like this is not a certainty. That's why it's called a statistic. Right? Statistics are not certainties. They are meant to be taken in order for you to evaluate what the future potentials are based on a specific condition, which is the criteria between the volatility versus momentum profile. Okay, team. So that's to say that we have from now, right, from the firing of the signal that we spoke of yesterday, which we said we were about to face a move to the upside, and so many people didn't even believe that, right? So, yeah, based on that firing of the signal, we have from that price, which could have been, let's see, the close of this candle here, right? So this is Monday, this is Friday. So the close of this candle was, let's see, 85 cents, right? So 85 cents was the close. So from 85 cents to 190% to the upside, which is right up here at $2.57, these are the probabilities, right? Meaning that we have to now look at relevant areas of resistance, and then this will give us the higher probability resistance zones that we can face as a pullback and or the ending of the statistical move itself, right? So I can see an inflection point here between 130 and 135 here. There's another inflection point right up here, right, between the areas of 150 and about just to be, I mean, this is complete discretion and very fast, right? Between 150 and 159, we have another area of resistance located between 172 and about 185. And then, of course, we have the final area of, we have two more areas, right? So this would be one of them right over here. That is at about 235. Yeah, 235 top with a 226 bottom. Okay, so let's see here. I just wanted to show you one more thing. Okay, yeah, I think that's about it right there. And except of course, we can point out the one most obvious one right here, right? So this 298 top here was in fact the one where I pretty much signaled that was the end of the move to the upside, right over here, right? So this was the move that I essentially said that we would fulfill based on a 3,000% move to the upside from 47 cents, of which the price action reached 45. Okay, so my statistical metrics were able to tell us that we were going to reach 47 cents, of which 45 was realized, and a 3,000% move, in other words, aka $18 to some people who are still sticking to that target and have not been around to understand why it's not valid anymore. Right. So anyway, that 3,000% move to the upside led to a move that was 450% to the upside. Now that you know how we're calculating this, you see that this was a slam dunk, measuring a move that's up to 3,000% and getting 450% to the upside based on that condition. That's pretty awesome, guys. This is why we have to take what we're looking at as statistics as not the certainty. This is not the certainty. It is not 190%. That means that we have anywhere between the firing of the signal down here to 190% to evaluate all the areas of resistance. So the higher probability one, the one that has the most, the one that has let's see, a bigger percentage of disbursement of returns, that would be likely the zone that we're going to stop at, right? So this is going to be set for another type of video in order for us to determine that, right? To determine which resistance has been used the most. But that really is all dependent on your volatility versus momentum profile. As long as we are still either contracting or increasing in volatility, and we have this paired with stochastic momentum pivoted towards the upside, the signal is essentially still valid. Okay, team, so let's move on to the next chart here and take a look at something very curious, right? So I haven't really drawn this triangle to be perfect, right? But it's good enough to mention that it's approaching its apex, right? So I mean, I know, I get it. I can be tighter, right? So we're right at about 90% to the apex of the triangle within this formation, arguably, right? So this is FOMO here. This is $9. Everybody was shooting for the moon right when this thing was touching $6, $7, $8, right? So this was already critically overextended at that point. So we can extend the trend line from the triangle to look something. Actually, you know what? It would be. Damn, it actually would be something like this, or we can face it to be like this. I honestly would favor it to be like this, right? So yeah, we're at about 80% to the apex of the triangle itself, right? So it's just, this introduces some ridiculous targets first, okay? So the first target that we're going to have to worry about here. So this 3-day chart is going to be over in 1 day and 19 hours. I'm saying the candle, my apologies. Right, so taking a trend line from the bottom side of the trend, which is right about here, 77.65, to the top side of the triangle, aka hypotenuse, we apply that to the top side or to the breakout area, right? So if the breakout area is on the next 3-day iteration, which very much could be possible, right? We can apply that triangle price objective right there. This is the psychological objective. So that's suggesting a top side of 172. And why does that sound so familiar to you? Well, let's go ahead and take a look at our areas of resistance when we're on our way to the top, right? Here it is. 172 was the one that we looked at right over here. 172 to the space of about 185. Right? So this is already looking like it's one of the targets that we can face. And why else is it super familiar? Well, the standard deviation is measuring 89.56% from the opening of the firing of the signal. So if we highlight that 89% to the upside, it's leading to 168. So you see how the confluence works? All right, so that's how I trade, right, team? So this is suggesting that we would break out of this triangle here and make a move all the way up to the area of 171, of which falls in line with the bottom side support from our discretionary target right here of 172.85. It also meets with the standard deviation, the 68% of the performers, which are the higher probability performers, of 89.56% to the upside. And if I'm not mistaken, there could even be some type of geometric that's suggesting that top side to be highly valid, right? So if we're looking at that, then sure, we're very close to the 3.272, right? But we can take something else into consideration. We can take into consideration the current candle, swing high to swing low from a fib retracement. So let's see if geometrically speaking, it gives us something around there. Well, it does. Check out the 3.618 located at 168. And this is let me go ahead and just make this a little bit wider like this, right? There we go. So now we can draw in another area of resistance for ourselves, right? So just like this, 172 or whatever that was, right, to about that 168. And this is essentially where price action is saying that we can go. It sounds familiar yet again, because the geometrics are saying 168, and so is the standard deviation. Guys, 168, okay? So It doesn't mean that we're going to 168. It's just this is how I trade. I trade based on confluence. I trade based on repeating signals. If something is flashing one target, and we have a supporting metric of volatility versus momentum, I'm gonna favor a team. Okay, so that is how I trade. That is my style. Let's go ahead and just embrace how each and every one trade themselves individually, right? So you'll be able to catch a really nice edge over the markets in trading when observing other traders do their thing. Okay, you guys, so let's go ahead and now look at the last chart, the next chart here, and see that we broke out of this. So this was the range that we were talking about yesterday as resistance, right? We broke upside of it, very nice. We faced the resistance from the following range that we're going to use as a potential support for a breakout, and now we're coming back down to validate the support of the previous range. It's only normal for us to do that. Next thing to look at is that this is already trying to break out of this macro scale falling wedge. And this was essentially the breakout, retest, and breakout. And now next range retest, next range retest, next range retest. You see what I'm saying? Right? So that's kind of like how the price action ends up moving anyway. The ebb and flow, the natural ebb and flow. Okay, team, so let's go ahead and now move on to the next chart and see what we have. So 6 days, 19 hours to close this monthly macro iteration here, team. And it's looking like it may get a bullish formation if we are closing this candle anywhere. I'm saying, actually, if we do close this upside of the opening valuation from the previous monthly candle, which is if we see the OHLC up here, right, and hover over the candle, that'll give you the opening value. So that's 98 cents. Closing anywhere upside of 98 cents would essentially make this a pretty nice inverted hammer, right? So even if we did close beneath that 98 cent zone, I mean, today we faced 101, so that was pretty powerful, right, team? So yeah, closing anywhere beneath that zone or above it would be great for the asset, right? Because this is usually a type of signal for a reversal coming in. All right, so now let's go ahead and look at the last chart here, and that's going to be the RSI, right? So the RSI in the immediate short-term time frame, 30 minutes, suggesting some consolidation, right? We have some more consolidation here on the bi-hourly time frame, slight upside pivot on that SMA 14. We still have some slight consolidation here on the 4-hour as well. But please notice that when we have this consolidation and with a downside pivot, you have to pay attention to your SMA 14, represented by the pink line. The signal line of the RSI, Relative Strength Index, is your cyan line. Okay, so when you have this SMA 14 pivoted straight to the right like this, you can only assume, right? You can only assume that a short-term pullback is due in order for us to validate the support and the breakout out of the realizing or the succession upside of the SMA 14. So breaking upside of the SMA 14, retest the 14, continue on to the upside. Okay, team, same situation happening here on the 8-hour time frame, slight retracement, validate that SMA 14 breakout that we just got, and then continue on to the upside. Okay, so yeah, the 12-hour time frame is also suggesting a continuation to the upside. But if we're looking at the 12-hour and the daily, let me see the bi-daily now. Yeah, if we're looking at the daily and the bi-daily, we do have a short-term resistance coming up, several percentile to the upside, right? So that's this is quite the distance here because this is a daily time frame. Okay, so this is the gravitational zone of the bull weakness percentile, meaning that we would face a resistance here and then pull back. So why does that now sound familiar? Well, that's because we were just talking about it, right? We would get a short-term continuation to the downside, which could be equivalent to facing I mean, guys, it is possible for us to reach back down to 85, 87 to validate this entire area of support. If we do get, I mean, if we're considered the lucky ones here, then the SMA 10 on the 8-hour would be the best support for us to face at around 88, 87. Confluent with the 1.272, bounce to the upside and use the 12-hour and daily resistance to be anywhere between 95 to $1 yet again, right? Technically 101 because of yesterday's high, right? And then this would pull back one more time to come back down to the area anywhere between the opening of this candle here from today, which is 94.26, to the bottom side of the range of 95.99, and then continue onwards and upwards. Okay, so let's go ahead and keep an eye on the price action here and observe as we go. Okay, 3-day time frame looking macro bullish, getting that bounce from the SMA 14. And right here, the 5-day time frame is really just waiting to see what the shorter time frames are going to do in order for them to influence the very heavy 5-day time frame. Okay, team. So, yes, please take whatever, guys, listen to this, okay? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, okay? I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, 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 very good night, and I will catch you at the bell, literally in the AM, mañana. Adios.